Good afternoon, ladies and gentlemen, and welcome to our webinar today. Before I introduce our panelists, I'm going to talk a little bit about why we're here. We are recording this webinar because we want to talk about compliance. Compliance right now is a very tricky issue for companies across the world. Many companies are trying to expand at the expense of compliance. And they're trying to innovate, but they're finding that there's only so much they can do before the reality of compliance catches up with them. Now, I'm going to introduce our panelists today. We've got with us Chandra Avanavadi, who is the head of compliance and the money laundering reporting officer at Zazzuu. Welcome, Chandra. Thank you for joining us today. And we also have got Raj Khangura, who is an advisor to Zazzuu and also a very experienced compliance consultant. So thank you for being with us today, Raj.
Thank you, Ronke. Thank you for having me.
Thank you. And last but not least, we've also got Akinwunmi, who is the co-founder and the CEO at Zazzuu. Thank you for joining us today.
Hey, Ronke. Thanks for having me. Hey, Raj and Chandra.
Fantastic. And gosh, I haven't introduced myself. My name is Ronke Atkinson, and I am the Chief of Staff at Zazzuu. So without much ado, let's jump into our questions for today. So Chandra, I'm going to start with you. Can you please tell me what, in your view, is the impact of compliance in the fintech space? Essentially, why bother? Why is it so important?
Compliance is the biggest game changer in today's world, especially in the fintech area. A lot of fintech companies are regulated today in various markets, in Europe, in the UK, the US, as EMIs, small APIs. But the problem with these companies is that they are more technology companies, or think of themselves as technology companies rather than financial services institutions. But their attitude to compliance is slowly changing. It was at some point of time over the last 3 or 4 years was non-existent, and now it's changing for the better. Unfortunately, this has come at a great cost to some of them in the form of regulatory action, fines, and investigations by regulators in various jurisdictions. This is primarily because, as I said earlier, they consider themselves technology firms, and therefore compliance and regulation is more of a tick box exercise or a requirement rather than an actual investment or something that has to be taken extremely seriously in today's world. Now, they do comply on a very superficial level, but there is a lot more to be done. And they are now beginning to realize it, and more investments are being made into these areas to help ensure that they remain compliant, and going forward they're able to innovate and become better companies and more compliant. So this is primarily the biggest impact. They are looking to change, and they have to change, because otherwise you have a big problem with the regulators world over.
Thank you for that, Chandra. So what I'm hearing is that, it's not an intentional thing, but it's just that the focus on technology is so much more significant, with a lot of companies, and, they're just lagging behind, in compliance. So this is something that, needs to be much more, a focal point and an integral part of what it is that, the business that they're providing. Is that right?
Absolutely.
Yeah. Thank you so much for that. I'm going to move on to our next question, which is, I'm going to direct it at both Raj, and I'd love to hear from you as well, Kay. Can you tell me, how do you balance compliance with innovation in a fintech startup, right? Startups are predominantly about innovation, which is exactly what Chandra's just been saying, but regulation obviously seems to lag behind it.
Yeah, I feel like they run parallel, actually. I feel like a lot of founders and companies and directors and employees themselves really do understand the fintech space that they're in at the moment. And what they also know is, because, you've got so much open source information, a lot of professionals are now on LinkedIn, Compliance is a focal point for innovation. You can't innovate without compliance, and without compliance, you can't innovate. The speed at which transactions go cross-border is the main concern, because it can elude detection very quickly from going country to country to country. And consumers and businesses, their main concern always is the speed of the transfer and the cost of the transfer. If they get those elements right, they're really happy with the end service, the end product they're receiving. I feel like in today's space, regulators are trying to catch up with companies, and there is a little bit of a gap there. And I think we've all seen it in the last couple of years, because the payment space, the fintech space in general, the alternative to banking, it has exploded, especially since COVID, actually. People can't go into branches and so on. But I really feel like founders nowadays and companies in general are very, very much educated on what's needed with compliance. And I personally have found that here at Zazzoo, that the founders really, really buy into compliance. And, they want to know, if we have this idea, how can we do this by being compliant and, making sure that we don't run the risk of regulators questioning why we're doing things, or if they do, we can evidence that we're doing it appropriately.
Thank you very much, Raj. Kay, would you like to comment on that?
Yeah, absolutely. I think that's a really powerful question in terms of how do you balance compliance and innovation, especially as a fintech and as a founder. Part of the reasons why we started this organization is because we want to create an incredible financial services experience for our customers. And one of the things that's lacking in this area is that experience for Africans, for the type of customers that we serve, has been a suboptimal experience. So for us, it's not a question of how do you balance compliance and innovation. For us, we think like compliance and innovation work hand in hand. And actually, we see an incredible opportunity to create innovation around compliance. And what does that mean? Today, if you're an African trying to onboard into most of the global financial services products, the experience is very biased. The experience is suboptimal. It's taking people half a day. In some cases, if you have a very funny African sounding name, compliance system might just flag you. Or if you happen to be from a high risk region like Nigeria or other parts of Africa, again, many organizations probably wouldn't want to onboard you because you're seen as high risk. And for us, we actually think that there is a massive gap, a massive opportunity for companies like Zazzuu to step in and fill the gap and rethink how we onboard migrant workers globally and Africans globally into a system that's been predominantly westernized. So for us, actually, we're very excited about the possibilities, the innovative approach that we could take towards onboarding customers into the financial system in a way that obviously is compliant with local jurisdictions and local regulators. And so we're quite excited. And for us, we don't see compliance and innovation as a hurdle. We think both of them work hand in hand, and we're quite excited about that. I'm happy to kind of talk a lot more as to what are the specific things that Zazzuu is excited about in terms of compliance and innovation. But certainly, from our perspective, this is an exciting opportunity for us to train the current system that we have to understand the cultural context of Africans, so we can create, I think, a much more equal onboarding experience and compliance experience for customers across the globe.
Thank you for that feedback, Kay. It sounds like there's going to be a really large volume of people who are, unbanked that will benefit from the solution that is being developed at Zazzuu. And I like the fact that you're saying that, compliance and innovation are, they work, hand in hand. And again, Raj, I took on board the fact that you're saying that, there is actually a lot of education, founders are making sure they are very, very well educated in this space. So in your view, it's working sort of quite well together. Now, Chandra, a question for you. Given the focus of the regulators on various aspects of financial crime the world over, and particularly in the UK, how do you think payment firms and fintechs can become more compliant?
That's a big question, Ronke. Thank you. If you've noticed over the last few years, there's been a proliferation of fintech companies, crypto companies, and payment firms, and all kinds of technology firms. Now, due to this explosion in growth of these firms, the regulators are having a very, very tough time actually trying to regulate them or police them from various aspects. This not only relates to the compliance portion of it, where you have responsibilities to customers, responsibilities to the regulators, reporting requirements, and the rest of it, but majorly financial crime compliance. Financial crime compliance is a hot button topic among all the regulators in the world without exception. The US, Europe, the UK primarily. UK has been very focused on financial crime compliance and is very clear about its aims to make sure that the UK becomes a thoroughly reputable jurisdiction for financial crime compliance. Now, coming to the companies themselves, where is the problem? The problem lies with delivering technology, as my colleague Raj put it, and also to make sure that the speed of the transfers and payments are very quick and very fast. And because of this, most of the time, the focus is on delivering customer experience. But this is not a wrong thing in itself. But to limit customer experience to something called clickability is wrong. We need to understand that unless we are able to understand the customer, his backgrounds, the information that he has provided can be verified properly, his sources of funds and income, occupation, all of this information is critical to enable us form a view of the customer, one, and also to enable us protect the company and the customer himself from wrongdoing, fraud, money laundering, hijacking of identities, vulnerability issues. So many of them, all of them focus on the background of the customer not being obtained at the right point of time. Are we doing the right thing by saying, let's obtain A, B, C, D bits of information and let's get him onboarded? Yes, it's probably correct from a customer perspective or a company perspective for advancing its business objectives. But from a compliance perspective, from a financial crime perspective, we are failing. We have to get that information from customers to enable us to make sure that we know them well, we understand customers, we understand customer behavior, and then use that to reduce the impact, because money laundering and all of the other financial crimes are rampant and will continue to be so. We, the regulators and the financial services firms, are very much behind in the curve in the fight against financial crime. Though, therefore, we should be seen to be compliant. We should be obtaining all the information required for the customer to ensure that we are able to protect ourselves and them from financial crime issues.
Chandra, thank you for that. So again, just to recap, I think what I'm hearing from you is that it's really critical that in the effort to increase the speed of transactions, some of the failings that could happen is that perhaps inadequate information is collected, and that information is absolutely critical to ensure that we are protecting not just the customer, you're protecting the organization. There's a risk of identity theft, there's a risk of fraud, the losses, the impact actually is on both sides. So it's in the interest of all parties involved, all stakeholders, to ensure that there are no shortcuts, sacrifices made, just to ensure, as you said, a fabulous customer experience. low, number of clicks.
A quick add-on comment to that, Ronke, if I may.
Mm,
Over the last year and a half, there have been a lot of news items around financial institutions regulated both in the UK, Europe, and other countries about failings, especially in this area. It's always about onboarding, it's always about risk assessment, it's always about monitoring. So, given the fact that there is a continuous stream of bad news coming from this area, it's the institution's duty and to make sure that they double down on this aspect too, and try to remain compliant at all times, only through obtaining information and making sure that you review and make sure that the customer records are always updated in your systems. Thank you.
thank you, Chandra. I mean, that's very well understood. Okay, so the question for Kay. Can you tell me how has Zazzuu been able to avoid compliance issues so far? Given a lot of what we're seeing, particularly in this very month, there are a lot of companies that have come under fire. They have been subjected to sort of quite serious fraud allegations and are being investigated. So can you talk to me about what Zazzuu is doing in this particular area?
Thanks, Ronke. There's a saying that I usually say, and pretty much the mindset that we've had from day one at Zazzuu is that we think like a fintech and we act like a bank, right? And with that mindset, it means that our execution was completely different from day one compared to, I guess, how other companies would approach fintech. For us, we knew compliance is not an afterthought. We knew, like I said before, this is actually an area of opportunity, an area of innovation, and as part of like the overall experience that we're trying to create for our customers, we knew that again, compliance, we need to be very, very strong in that area of compliance. So one of the things that we've been quite intentional about, and we've made very public to all the key stakeholders, is that we need to build a very solid compliance framework. We wanted to make sure we're partnering with the right people, and the right people for us, it's partners that understand Africans, partners that understand migrants, and obviously partners that are compliant as well. But beyond that, we wanted to make sure we have the right expertise in-house as well. So one of the areas that we knew needed to grow very quickly, even before we went to market, is hiring some of the best people in the world in the areas of payments, banking, and compliance. And of course, we've got Raj with incredible experience. We've got Chandra with insane amounts of experience when it comes to compliance. And so for us, we've been able to avoid so many issues because again, we're thinking like a fintech and acting like a bank. And, part of that means that our compliance infrastructure and process has to be very, very tight. We can't, make room for any sort of money laundering issue or onboarding the wrong client. But at the same time, we wanted to make sure that we, from a customer perspective, even though we have a very tight compliance system in place, we still wanted to make sure they have a frictionless onboarding experience. So much so that today it takes you about 5 minutes to actually onboard into the Zazzuu platform once you have the right documentation, right? And so again, going back to your initial question, because we have the right expertise, because we've invested in the right platform and we've partnered with the right people, we're able to leapfrog, to avoid many of the issues that we're now hearing some companies sort of deal with today. Because for us, every single transaction needs to be compliant. Every single transaction is an opportunity for us to serve multiple stakeholders, because as well as we're a technology company, we're also a financial services company, and we're responsible for making sure that we create a safe and secure platform and a compliant platform for all the key stakeholders that we serve. So, I'll put it down to one, the mindset that we have. We knew that in order to grow, we need to make sure we're compliant with local jurisdictions as we expand into different markets. And we knew that we needed to invest into the compliance team to make sure that we have the right mindset, the right people advising us on the best practices and best standards. And of course, today we're FCA regulated. We have an e-money license that comes with really serious responsibility. And like I said, it's an exciting opportunity for us to not make that process a daunting process, right? Especially from a customer standpoint, we wanted to make sure that it's still an absolute enjoyable experience, even though we're doing the right thing and we're making sure that as we grow, we don't expose our platform, we don't expose our customers, and we're certainly avoiding common issues that we know many of our organizations are experiencing today.
Thank you, Kay. I mean, that's a fabulous response. I'm hearing that you've got a really robust governance framework, and you've definitely taken a 360-degree approach to compliance, and you're looking at absolutely every touch point, every stakeholder, and it's like, there is no stone that's been left unturned in this regard. I mean, I think that's really, great advice. Because so far we've talked about, compliance from, specific angles, but, everywhere, onboarding of partners, it's not just about the customer experience, it's, everywhere, every area of the business, there's compliance impact that is reviewed. I'm going to move on to Raj now. I'd love to hear a little bit from you. Can you tell me how can the risks that may be associated with payments going into and out of Africa specifically can be controlled?
Yeah, this is an interesting question, because the first thing you need to question is, well, what are the risks? Not just going into and out of Africa, but just in transactions in general. As I said, the speed of cross-border transfers, right? It can be, for auditors, it could be a terrible case, because, it goes cross-border so quickly. So what are the actual risks? And the actual risks are always going to be the two main elements of financial crime, which is money laundering and terrorist financing. And in order to combat against that, you need to have a solid compliance regime. And what I mean by that is, at the very beginning, and I know Kay and Chandra both touched on it, but at the onboarding stage, because it's at this stage which is critical, because you're either going to onboard the correct customers, or your customer base may be tainted with a few bad actors. So your onboarding part is absolutely essential. So it's really important to do your KYC, which is know your customer, and it's really important to do your KYB, which is know your business, if you're onboarding businesses. And the reason for that is because once that client is onboarded, when they make a transaction, essentially placement is taking place. Now, that means they've now transacted, and now there are funds in the financial system which are going cross-border. Once the funds are in the financial systems, whether it's going through your own bank accounts or partner institutions, other financial institutions, they're now going to be getting layered and integrated within the system. And it can be really, really hard to trace. So after the onboarding part, what's really critical is your ongoing monitoring and your KYT, which is know your transaction. What I mean by that is it in line with previous customer transactions? Are you doing originator and beneficiary checks, sanctions checking, PEP checking, and adverse media screening? Now, if we look at transactions taking place from, let's say, the UK into Africa, this corridor isn't so tough, actually, because what you're really looking for is the source of funds. Where do the funds basically originate from? Where are they coming from? Can we show evidence of it? Is it coming from employment? Has there been a sale of property? Is it inheritance? Is it a gift? And so on and so on. We can easily prove that in the UK through bank statement, financial statement audits, and so on. It's the other corridor in the reverse. funds coming from Africa into UK, which makes the source of funds a little trickier to prove. A lot of transactions over there take place in cash, so there may not be audit trails. So really, a lot of this depends on a company's risk appetite, because let's remember, FATF, the EU, no African country essentially is sanctioned. A few of them are high risk. I mean, if you think of Nigeria, I don't believe they're even on the FATF or the third risk high countries list. So it's about setting your own risk tolerance, which is absolutely essential, because what you need to do in order to control these risks that I've just mentioned at the onboarding stage, at the ongoing monitoring stage, at the transaction monitoring stage, is to have your risk appetite and risk assessment that you can show partners, you can show regulators, you can show it internally to say, look, we're actually okay receiving funds from Africa because we have all of these controls in place, and this is how we follow the process. And that's absolutely essential and absolutely key, because that is the risk-based approach. If everybody had the attitude that we can't service Africa because there's high instances of fraud, we don't know where the funds are coming from, I mean, money would never get out of Africa. Let's remember, the economy in Africa, they have suppliers based out in Asia, in Europe, all over the world that need paying. So that's on us, companies like Zazzuu, to facilitate those payments. All you need to do is make sure you have the appropriate controls in place. And I really believe it's a continent that's open for business.
Raj, thank you so much for that feedback. I'm going to ask just a couple of additional questions. I mean, that was really, really useful, and I've just learned a lot from what you said. You used two quite technical terms, which were placement and layering, and, my understanding of layering is that, it's like when someone combines, legitimate funds with illegitimate funds, right? And, there are sort of specific ways that you can look at detecting this, and assuming that not all our audience are, trained on anti-money laundering. Can you just tell us a little bit more about, those, particular actions?
Cool. And I always like to bring it back to current day events or things that people can relate to. Now, when I train a lot of other financial institutions and companies, I always use Breaking Bad as the perfect example of money laundering, right? Or the Ozarks. People relate to this. It really isn't difficult. It's about getting your cash, putting it into the financial system in one way or another, buying a hairdresser's, let's say, taking those funds out of the hairdressers, and then placing them somewhere else to buy yourself some property, some cars, any assets that you want. It's the easiest way of describing it. It's, as you mentioned, Ronke, you was absolutely spot on. It's getting illegitimate gains and making them legitimate. If you guys want, even post webinar right now, I can send a great 3-minute clip of Jesse Pinkman and Saul Goodman going through how money laundering 101 works, and absolutely everyone can relate to it. It's really, really great. But going back to our industry in particular, as I keep saying, it's the speed at which money goes across borders. It's essential we're catching all the bad actors at the beginning before they start placing their financial funds in our systems, because then we get tainted. And once we're tainted, and then we send those funds onto our partner or to another bank that we may have a relationship with, essentially they also get tainted. But now the bad actors started to layer those funds. So they're going through one FI to another FI to another FI, and they can elude detection, especially if you go to a small MSB on the corner that can then transfer, let's say £100, but they do it in £10 increments 10 times into 10 different countries. That's going to be very hard to now detect. So that's what it all boils down to, essentially.
Right. So bad actors can be very intentional about what it is they're doing, and that's what's making it
they
so.
100% know what they're doing. It's for us to help them.
Yes, I see that. Great examples. Thank you so much, Raj. Another question for you, actually. So, in your view, how can the establishment of partnerships and increased collaboration contribute to the payment sector, again, for Africa?
So this is really critical. The reason being because, again, with cross-border payments, you need to be licensed in many different jurisdictions if you want to service them. So as we're providing services to UK customers, we need to be regulated in the UK. When you want to provide services to customers in the EU, since Brexit, you now have to have a different license in the EU. And the same would go if you do it in the US, you need MTL licenses, and Africa, the UAE, and so on and so on. This now becomes a very, very expensive process to get licensing, because not only are you applying for licenses, you then need to staff those other entities in those different countries, and it has to be a whole new operations. So the collaboration with key partners and other financial institutions that are licensed to service those clients is critical, because without these strategic partnerships, it's very hard to send money cross-border unless you have an endless pit of money where you can just keep spending lots and lots of money on your licensing. And that's not the way the world is going. There's enough players in our space, in our market, that we collaborate with, because we're all trying to find a solution on how we service consumers and businesses the best we can. And honestly, it happens with partners throughout the world. So you could partner with a company that is licensed in Africa and a company that's also licensed in the UK or EU, and you can transfer those funds, because the key bit is once a company takes custody of those funds, that's when they really need to be regulated. And because they're taking custody, it means they want to protect, they need to safeguard those funds. So you need to have these partnerships that are strategic and strong, but also trustworthy. And I know Kay also has his own perspective on this question as well, so I'll pass it on to him. But from my perspective, I just see these strategic partnerships as key to developing businesses, developing the industry, and making sure consumers and businesses that are transacting cross-border receive the best service possible.
Thanks for that.
Kay, I'd love to hear from you.
No, I think this is a great question, and Raj, you've touched on the main thing, really. I mean, when you think about the flow of funds globally right now, or even more specifically, flow of funds from the diaspora to Africa, because that's always the market that we're focused on right now. One of the issues in this space is like it's a huge market, right? There's money flowing in different direction every single day, even as we speak right now. And it's such a fragmented space as well, not just for the customer. It's a fragmented space for even businesses and banks and even financial institutions, right? And one of the fundamental principle that we built Zazzuu on from day one is that how do we bring this chaotic, fragmented space? How do we connect everyone together in a way that all the partners within this network, share have a shared resource, and actually we reduce the liability, we reduce the risk, we reduce the cost for all the key stakeholders, but at the same time increase the value, increase the experience for every single partner. And what's been lacking today is a platform that actually take this approach in terms of bringing people together. So so one of the things for us it's our business model, our platform, our point of view, our belief. It's that we can't unlock the potential of Africa, the potential of Africans, and the potential of the world doing business in Africa and Africa doing business with the world without bringing people together, without the partnership and the collaboration. Because when you think about it, Africa is now like a country, right? It's like 55 countries, or some people might say 54, right? And in each country, there are different, laws and rules, there are different, cultural behavior, different currencies, and different need for moving money, and different entities and different businesses. So how do you how do one entity in the UK serve all of these markets without having the expertise or the resources to be able to deploy a solution into that market? So for us, the partnership is absolutely critical. And now I'm talking about the flow of money, but even partnership within between countries, understanding, being able to identify a bad actor, or being able to set up locally so that you can operate in a local jurisdiction. So anyway, I think our take is that partnership is absolutely essential. Partnership is the only way that we can truly unlock the full potential of the African economy, right? Partnership is the only way that we can truly connect Africans back home and Africa to the global world. And of course, as part of that there's a need for collaboration in different verticals in order to do that. And so, for us, the greatest opportunity for platforms like Zazzuu is to think of things from an holistic standpoint, and to think about how do we bring all these different entities together in a way that they can all serve each other in a mutually beneficial way. So we're quite excited about that. This we definitely need partnership and collaboration in order to again to unlock the full potential of what it is we're trying to achieve for the continent.
Okay, thank you so much for that. There's a beautiful African proverb that comes to mind just listening to you speak. I'm not sure if you're all familiar with it, which is, if you want to go fast, go alone. If you want to go far, go together. But I think in the case of, compliance, attempting to even go alone is, a really sort of poor strategy, because of the complexity of the area. As you said, unless you've got incredibly deep pockets, it just doesn't make sense. And there are so many great, partners out there, strategic opportunities. And what, Zazzuu is focused on is lowering friction in that area, and, creating, a sort of nice, easy platform for collaboration.
Yeah. Okay, if you don't mind, can I just share this very simple use case that I think general audience would be able to kind of make sense of, right? This is what the situation is today. We have a single customer who has relationship with 5 payment institutions. Like, this is real life story, right? And this single customer goes to one platform and on board, and that means KYC, know your customer. That means there's sanction check. There's all these costs with every single institution that this same customer is onboarded with, and all these different entities are all serving a very similar need, which is to help this customer move money from one place to another, right? Now the problem here is, like, none of these entities are aware of this. At least, well, they know it, but they're aware of the fact that this same customer has, multiple different profiles with different entities. Now, the issue for this customer is that because he or she has fragmented data and fragmented experience and fragmented data across these 5 different institutions, it's actually very hard for him or her to have a solid credit profile, because her data is fragmented. But also, it's very hard for her to have like a seamless, money moving experience, again, because it's fragmented. On the flip side, the institutions that are serving this one customer, they're spending too much resources, right, to serve this customer. And so for us, without a collaborative platform like Zazzuu, what you have is, companies on this side of the world deploying unnecessary resources, unnecessary capital to just serve one individual entity. And so the way we look at this is, how about we bring everyone together under one network, the customer and the service providers, and we're able to see all the inefficiencies, and we can reduce that inefficiency, and we can share data amongst these institutions and provide a much better experience for these institutions, but also a far better experience for this customer, in a way that regardless of which institution the customer is going for, right, actually we can enable her or him or her to have a far better experience switching, right? But more importantly, we can enable these institutions to quickly identify that customer and serve her much, much, much better. And this is like just a tiny aspect of the value of partnership and value of collaboration that is still yet to be unlocked when we think about cross-border payments and when we think about financial services. We think there's huge opportunity for partnership and a huge opportunity for collaboration. And again, I just wanted to share that with you because, my initial response might sound a bit high level, but I wanted to share like a full picture of how actually consumers today can benefit, can have a far more benefit by coming to platforms like Zazzuu rather than what it is they're kind of doing right now.
Okay, that was really, really helpful. I mean, understanding how much inefficiency there is in the system, and actually it's not working for either side. Neither the institutions have the full picture of, what this customer's capability is, and, the customer's also not being, sort of served, properly, because they only have fractional information, on what each individual as a user is able to do, or even the business. So, this is really good to know that, creating a single customer view and obviously creating operational efficiency is going to be a win-win for, both sides. That's really helpful to understand. I've got a question for you now, Chandra. Can you please tell me, in your opinion, are there any specific weak spots that payment firms and fintechs need to identify and remedy in order to remain compliant?
So, very, very important question, Ronke. Thank you for that, because it is critical for firms to understand that it's not just being out there that matters, but it's also being compliant, as well as showing that you have the right structure, the right level of governance, the right content of people on your board to be able to be and remain compliant. Now, a few of the key things that they need to take into account is the governance structure. Obviously, then comes your policy and procedure framework, that is equally important. We have training, that is today very, very important, because people do not understand what they are needed to do and what they need to do and how to do it. And fourth, having a strong board presence in terms of oversight and a strong internal audit function. So all this goes a very long way in making sure companies are compliant. Governance structures typically should include a solid board structure, advisory positions, non-executive directors, the appropriate committees to monitor various aspects of the business, all these reporting back into the board, properly chaired by non-executives. Certain companies may not be able to do all this at one time because of the costs involved, and obviously because the business models may be simpler to deal with, but they have to get there someday. Not all businesses remain small, and even small businesses grow someday. The other part is where the policy procedure framework needs to be strong. Every bit of compliance requirements from a regulatory perspective and from the AML perspective should be taken into account to frame out a proper policy framework document, which can then be implemented by the company by making sure all the policies are not just templates, but they should be tailored to what the company does and is. If the company is a payments institution, then accordingly the policies will have to be tailored to that requirement. Your onboarding procedures, your risk assessment procedures, all of them need to be tailored to what the company is, in where does it operate, what it does, and which jurisdictions it is involved in. All of it is critical, all of it is important. And while the standard templates of country risk, customer risk, product risk, and delivery channel risk is applied standardly across most business models, which is fair enough, there are specific risks sitting inside these. They're called sub risks or sub parameters, which also help determine further risks that actually create problems for the company at some point of time. This could be in the form of transactions. This could be in the form of, you know, developments in terms of the customer's backgrounds. All of this need to be reviewed, constantly monitored, and captured as part of the risk assessment to make sure that your customer data is up to date and that you're monitoring them constantly. Because as Raj pointed out, bad actors can be stopped from onboarding. What we should also make sure that once the customers are into the system, they don't become bad actors. Now, this is something that we have to protect against. Training is important. It has to be constant. Upgrades have to be provided to training. Refresher training has to be provided to staff and senior board members as well as committee members. And then internal monitoring, board oversight, and internal audit, all of them play a very important role in making sure the company remains compliant. So these are the four steps: solid governance, policy procedure framework, training, and then board oversight and internal audit. Very, very important.
That's perfect. I haven't got anything to add to that except to say what's clear is one shoe does not fit all, right? And you're saying that it's not sufficient just to, have a framework, procedure documents. It's got to be tailored very, very specific, to the market space that, you are playing in. So that's really critical, and training all the way across the board as well. Thank you for that. And the final question for our session today, I'm going to direct at you, Kay. Can you please tell me, what does the future look like for Zazzuu in the compliance space?
Thanks, Ronke. I think the way we look at the future, it's quite similar to the way we looked at it from when we founded the company. We founded Zazzuu on one notion. When you look at Africa, when you look at Africans all over the world, the financial services experience that we get is very basic, it's very rudimentary, quite frankly, poor. Today Africa is the most expensive continent in the world to send money in 2022, and it's ridiculous, right? So we founded Zazzuu on the notion that we want to eradicate this issue. When we dig deeper into this issue, we realized that part of the problem is one, there's an infrastructural issues with we have very old banking network that is just not serving us properly, and that's driving to the cost of payments globally. But that aside, the other issue that we realize is that the global financial system and compliance system that we have today also isn't built primarily for the African customers. When you zoom into the African customer, whether they're on the continent or in the diaspora, they have a completely different way of doing things. They have a different financial behavior or social cultural behavior. And I think that's something that the global banking system or financial system hasn't really catch up to yet. So for us, it's an opportunity for Zazzuu in a way to kind of train the global financial system to understand that Africans are not, quote unquote, high risk, to understand, Chandra just said, that we can't apply a template solution or copy and paste anti money laundering check or onboarding check to Africans. We really have to understand the social cultural needs, the cultural behavior, the financial behavior of these people. And so for us at Zazzuu, the from a compliant perspective, the future that we see is a future where African customers can onboard into global financial system in a way that's culturally relevant to them. Meaning, the identification document, it's not just the standard that we have today. There are so many well-meaning migrants that don't have sort of your standard documentation today, but they have other meaningful documentation. And so there's a huge gap for Zazzuu to be able to onboard people, of course, in a compliant way, but in a way that's much more culturally relevant. There's a huge opportunity for us to train the compliance system globally to be able to understand like how Africans deal with money and spend money. Where on the outside it may look like, hold on, what's going on here? This looks wrong. But actually, when you understand the customer on an individual level, you might get a completely different picture. And so it's our job at Zazzuu to really serve Africans properly, build an onboarding process that works well for them, that is very enjoyable. But we're hoping also to train other players, other people that truly want to serve Africans in a meaningful way, so that they can have the insights, they can have the data, they can have the tools that they need in order to onboard Africans into their platform. Because for us, the mission is very simple. We want to make sure Africans globally have access to the best financial services experience. And a bigger hurdle today is the current compliance, sort of template compliance system that we have. It's sort of outdated. We need to do more. And then, so that's the area that we're really excited about.
Well done, Kay, on working to change the game. I mean, at the end of the day, different doesn't necessarily mean high risk, but unfortunately, we all too often fear what it is that we don't understand. And I think what you're trying to bring is a better understanding of how, Africans live, spend money, and, the difference between Africans and the Western world, and educate the rest of the financial system so that it becomes much more inclusive. I mean, there's so much value, it seems, that needs to be unlocked, just by gaining that understanding. So I think tremendous work happening in that area. That brings us actually to the end of this session. So I want to thank all our panelists. It's been really educational. I know that I've certainly learned a lot. Thank you very much for the reference to Breaking Bad, Raj. I'll be expecting you to drop the link. I think our viewers appreciate that. That was fantastic. And to round up, I mean, look, this obviously remains a very, very complex area. I know we talked about, customer experience, and the need for speed, and that potentially being one of the reasons that there may be gaps. But Raj, you highlighted the fact that actually there's a lot of education in this area, and people aren't going into it blindly. But what is critical is that where there are bad actors, they're very, very smart, and they're intentional, and it's quite deliberate. They're looking for gaps, which is why it's so essential that there is governance. All steps are followed, procedure is critical, and collaboration, I think has been a real sort of key word, and forming strategic partnerships, as you said, across the globe. That's the best way, I think, for us to win. So I'd like to thank you all. I'd like to thank our viewers. If you liked our video, please definitely, subscribe, like, and share with your network. We look forward to seeing you next time. Thank you.
Thank you all.
Thank you, Raj. Thanks, Chandra. Thanks, Ronke.
Thank you.
Thank you.